Hello friends, how are you? Vladimir here with you, and this is the weekly review for 19th of August 2012. Well, last week was interesting, not too many moves, but the end was, well, good for the US dollar, all that related to the currencies, and the opposite for the indices, which keep making highs. We'll discuss about that. And as I said not once, from my point of view, we are building very well, very high, very great place for a cycle. And I think that all that related to the indices and many stocks, we are going to change the direction very soon, but we'll discuss about that later, of course. So let's start with this week, and let's see what do we have, what opportunities we can benefit from. The first great opportunity we have, from my point of view, is the Canadian against the Japanese yen. On the blog I updated about this pair on last week, and I still think that during the next week we should get some stop and beginning of a correction or a beginning of a down move. Let me explain why. The first thing we have to pay attention to is the amazingly strong resistance range, right? That's a wonderful range we have here. We can see that. Well, it could last a little bit higher, right? A little bit higher based on the past areas. The final area, which is very high and not relevant so much as for now, this is this area, which is around 8250. On the past, also we can see it used to be very powerful area. So what does it mean? MACD, we can see the weakness. Despite of this huge up move, MACD keeps itself not very far away from the zero line, right? Despite of the move, despite of being above the 200 moving average. RSI is aiming to very top. Last time it happened and RSI came to the top, what happened here on 2012 on February. Pay attention here, okay? That was the last time that RSI came to the extreme, right? With weak MACD as well, as we can see. Then it created the high, then bam, crushed for like 250 points, another push up, and then all it started. Now we are almost there on the same place again. As I say, it could take time. I think it's going to open this week, most likely. At least some of the part should begin this week. But this area, the big area, should be the area where the Canadian yen will place the high, will create the high, and start the down move. If we pay attention, right, we can see here a wonderfully strong trend line, right? 1, 2, almost 3 spots. Very powerful. This trend line most likely will be tested, which means we have long place, big distance to go. So that in this range, I think we should go and start the sales. On the 4-hour charts, we can see the weakness already. I think we should jump in already. If it's investor style, then do it already. If it's regular style, then two ways. Or the last push up to around the 80-70, 80-80 range approximately, and the candle pattern there will give us the okay to go. Or once this support area that was created, once it is broken, right, we will get two conservative waves. The first one, this trend line, right? The prices on the 4-hour chart are moving inside the channel, so the break below this level should open the doors for this level to come. This is very conservative, but break below this wonderful channel will open the doors most likely for the pair to continue lower for longer run. So CAD yen is a pair for a sell. Now the next pair I want to discuss about would be, believe it or not, Aussie franc. A pair I'm talking about for last 2 or 3 weeks, and I told you I think that the pair will start its retrace down soon. No, I don't think it's going to be a crash. I hope I'm wrong. I hope we will get something like that, right? That would be really wonderful. But it's most likely we will get some moves here, maybe correction, down, correction, and then some visit around this area. As I told you, I think that this pair will visit this trend line between the first two lows of this up move. The first two lows of this up move, the pair will go and retest that. Now the question is how we can join that, right? That's the question. How can we join it? Well, for those of you that are still out, we got a wonderful double confirmation. First of all, weekly engulfing. This is three candles engulfing, right? Pay attention. That's what I mean. Right, here we go. Three candles and engulfing. Normally, after such candles, what happens? A correction and then a continuation. Right? If you still did not have the chance to read, to learn about this pattern, then I invite you to go to the blog, right? And here you go, can go for the free downloads. And on the free downloads, you can find, right, these my two ebooks about the candle patterns. Make sure to read them. There is a wonderful explanation about the three candle patterns engulfing. Okay, so that's from the weekly chart. If we go for the daily chart, we have also very interesting situation. We have a first close below this area. See that? If we take a look on the line chart, that's the first close below the last month or more even low price of the closes, right? Close price, you can see here. Very, very bearish sign. RSI is trying to break through 50. You see that? Now the question is, what's from here? As I said, I think we might have a correction. Correction back to 102, maybe below, maybe to 101.70, 101.75, right? But the maximum level that I wanted to hold is 102.25. That's the maximum level I want the prices to hold below. As long as they hold below this area, then even, you know what, even if I would be even large and I would say 102.45, okay, that's the last area. Holding below this area should open the doors for the pair to move lower all the way back to this support range, starting from 098.40 going up to 099.20. That's what the pair should do. I think that now we will go like this. I wish we will get a crash. I'm just not sure about that. I think we'll go like that, and that's for the first move. Then remember the long line we have, friends. This one, okay. This line needs to be tested as well, and it will be. The only question if it will be this down move or it will make a stop somewhere like here, then make a like that, down, up, and then another down, and let's see. Only time will tell us how the pair will move. The next wonderful pair with a good opportunity is the Australian against the Canadian. I think we will reach a buy area very, very soon. First of all, pay attention for this wonderfully built move up. See that? The pair is almost reaching the Fibonacci. You see that? 50 of Fibonacci. Saying that the pair breaks through the 200 moving average, which is a bearish sign, but the 200 moving average normally being tested after the break, after the first break. More than that, pay attention. What do we have, friends? We have here a band to band move. See that? Band to band from Bollinger to Bollinger through directly. Then it breaks through, and it means it can go for duplication. Duplication means somewhere around here, 102.50. Maybe a little bit lower, right? We have a wonderfully built, as you can see, hidden divergence here, right? Wonderfully built hidden divergence, bullish hidden divergence. You can see the divergence also on the stochastic. I think that the pair is building a low, and from here we will get some stop here and a retrace up. back. It should go and try to retrace back to the 200 moving average. It should try and retrace for 200 moving average, and that's what we should be looking for. Going for the 4-hour chart, and that's our place to go with. Pay attention. From the last break of the Bollinger Bands on the 4-hour charts here, the breakdown, we get more than 20 candles right, and if you consider that as a retest to the 20 MA, then we get now 20 candles, new fresh 20 candles. We have wonderfully strong divergence and RSI coming to the edge. I think that this is the bottom. It will create a bottom here and should start the retrace up. Anyway, I think, from my point of view, that 102 is the final area to watch. 102. This is the final area to watch, where the pair could go deep down and then begin the retrace at least 100 points. At least. I would even say more, like 150 points, something like that. So that's my expectation for this pair. If it pushed lower. If not, then from this area I could imagine 80, 100 points correction, and that should make the move. That should make the job. That's about the Aussie against the Canadian. And how come Aussie franc should go down, Aussie Canadian should go up? Something might be misleading, and that's where it takes me to the dollar against the Canadian. This pair should push higher. We have a bullish divergence. See that? Bullish divergence on the stochastic, and the only problem, we don't have a classical candle pattern. We have something in between twins to harami. Very weird candle pattern. Classical? No, but it is. It does say that the bulls are coming. I suggest entering this trade by breaking this trend line and this resistance. When the prices will place themselves above the 0.99 and RSI will place itself above 50, that should be the bullish call. And I do think that the pair should push above the parity level again. I would go for 101.70, 101.60, 101.70. That's my area where I believe the pair will go. And not just that, this area is also a meeting of the resistance and this trend line. Could the pair push high from here? One way? Let's see. Only time will tell. That's the expectation. That's what we should go with once the 4-hour chart trend line is broken. Wonderful opportunity with pretty much low risk. If you want to go with investor style, which means negative leverage, right? Very small lot sizes for long run without stop loss, then you can start your attack, right? The next area to watch will be the 0.98. If it reaches, like that would be the additional entry, and look for the retraces for this pair. Well, if we are on the Canadian, it's time to discuss about the oil. And as I said not once, I think the oil is building top, and the maximum price I do see the oil coming. This will be this area, somewhere for the trend line, which means, here we go, right, pay attention, around the 98, maybe 99, something like that. We are now on the 200 moving average on the daily chart and a resistance. We are now on a daily divergence. We are now on weekly hidden divergence, bearish hidden divergence that is places itself right now. And we are now on a 4-hour charts, very, very bearish signs. Only question of time until the oil begins its cycles. Get ready for the sell. The best way to jump, of course, will be with the candle patterns. But as we know, the oil, sometimes it crushes. And this crush sometimes brings 300 or 400 points. That's why attacking levels could be also a good idea. The style I suggest to trade here is the investor style. That's about the oil. Now, what happens with the majors? Watching on the euro, I really can't even begin to analyze the euro dollar. I really don't understand what the pair is trying to make. It's acting weird technically, and I think that the pair is on nowhere place. I still think, and I still on opinion, that the euro dollar has to push higher, somewhere like 126 or even 127 area, right, before making the next crash. But for that, I do want the euro place itself above the 124. When it will hold above 124, we can discuss about next push up. But as long as it does not happen, I'm neutral for the euro dollar. About the pound dollar, my opinion is exactly the same. There is nothing to do. I think down, I think bearish. I just cannot imagine how to join it right now, and I can't find any reason for that, honestly. As for now, the next interesting opportunity we might have will be on the Aussie dollar. Pay attention, friends. We have this trend line. It was never broken yet. If this trend line and the channel will be broken, that could open very, very, very bearish mood for the Aussies, and that could push the Aussie down to 102 or even 101, or who knows, maybe even below. So watch out this channel I was talking about like 2 weeks ago. The pair is acting bearish based on weekly chart, right, and the weekly trend line. Maybe we are now just in front of another strong long push down, right? As you can see, long push down on a weekly channel. The bullish mode will start if this line will be broken, if the channel will be broken up. Then we can discuss about 110 again. Then we can talk about 110 again. But don't forget the long picture, right? The long picture. The long picture is very bearish, very bearish. As I told you not once, even if the Aussie will successfully ever place itself and create new high even, don't forget the weekly bearish position. The monthly, sorry, monthly. As I told you not once, for a very long run, my expectations for the Aussies are very, very, very bearish. Very bearish. And this line, it was tested once, it will be one day tested again. I'm very bearish for the Aussies. So far there are no real reasons for that. I'm afraid they will come. But we are not here to trade the monthly charts, right? As for now, so we stick for the shorter term positions. The next thing I do wanted to share with you, of course, will be indices. Pay attention, friends. We still follow potential double tops. Could it go and create new highs? Yes. But, as I said not once, that's exactly the bluff I'm talking about. No real reason for that. The monthly chart is still under very bearish pressure. Once something in US lighten up again, we will get another crash, unfortunately. So, based on investor style and a daily divergence and RSI that is coming to, well, very high, we should go and look for the sells. With the investor style, we can go and start. Regular style, jump in with weekly the potential double top whenever it will stop here or a little bit higher. We will start the attack. Something is coming. What? No idea. When? My bet is from middle to September to middle of October. Would be could it start earlier? For sure. But that's why I say for investor style we can go and do that, start the attack. For regular style, better to wait a little bit. Well, that would be all as for now, friends. Remember the trades we talked about not once, the Euro Canadian, right, with its harmonical pattern. We should jump in. Remember the Euro SEC, which I discussed about as well. Amaro Buzu, inverted hammer, very bullish signs. Could it push for another low? Definitely. But the pair is building very low, and if it makes the push to lower places, then we'll be waiting for another candle pattern, not this engulfing, another candle pattern and attack with wonderful strong divergence. Only question of time until it makes the strong move up, or from here or from a little bit lower. Everything is okay because we jump in and our risk is small, and a potential move and profit much bigger. That would be all for this week, friends. I wish you wonderful trading and good moves for the market, and good profitable week. Thank you for watching this video. Yours, Vladimir. Bye bye.